Thank you for joining us today. Tom Patrick's my name. I'm Head of Healthcare Property here at Barwon Investment Partners. I'm joined today by Srimathi Iyengar, a Portfolio Manager for the Barwon Institutional Healthcare Property Fund, and we're going to be having a bit of a fireside chat today talking about the healthcare real estate markets broadly here in Australia. Sri, thank you for joining me.
Thanks, Tom. Nice to be here.
The commercial property market's obviously facing a bit of a slowdown at the moment. Healthcare real estate, obviously volumes are down on previous years, but doesn't seem to be quite the logjam that we're seeing in some of the other segments. What are your thoughts on that?
Yeah, that's right, Tom. We are seeing a slowdown in the commercial real estate property market, primarily because of the rise in interest rates. But we are seeing reasonable activity in the healthcare real estate market with over $1 billion worth of activity in the last 12 months. There is considerable demand driving healthcare real estate, primarily because of the aging and growing population. Add to that the bipartisan support from both federal and state governments to increase health expenditure, which in turn drives healthcare real estate demand.
So there's been some transaction activity in healthcare real estate. That's good to note. That would lead me to believe that probably there's still a bit of capital out there chasing assets. Or do you think it's being driven by perhaps more value in the market that investors are seeking? What are your thoughts there?
Yeah, there's definitely more opportunities we are seeing in the market. We recently acquired a specialist medical facility at Westmead Health Precinct in New South Wales, which is actually a very tightly held precinct at a 6.25% yield, which is good going for us. The asset is anchored by Castlereagh Imaging, Sonic's imaging business, and IVF Australia on inflation-linked leases. We've also been pretty busy working with our developer partner, who is starting the construction of our Eastwood Private Hospital at Adelaide, which is going to be a 6-theatre, 50-bed hospital with about 280 cars.
So you've certainly not been sitting on your hands, which is good. Looking forward, medium term, where do you think there might be opportunities across healthcare real estate? I mean, there's a sentiment out there that we're getting potentially towards the top of the interest rate hike cycle. What do you think the consequences may be for your segment of the market?
That's true, Tom. There is a sense that we're getting close to the top of the rate rise cycle and things will start to stabilize from here on. And we think that once the market gets its confidence back, healthcare real estate would take off again. In terms of capital headroom, we will be calling all our remaining equity to fund our development fund throughs and the acquisitions that we are looking at. We are not seeing any distressed assets or distressed selling in the market yet. But there are REITs looking to reposition their portfolio either for increased capital headroom or reducing their leverage. Our capital headroom provides us the flexibility to look at these assets opportunistically and acquire some of those to get long-term returns for our investors.
And obviously with the fund being open for new investment, we're out there talking to new institutional clients and existing institutional clients. I'm certainly getting the sense that there's a preference to cycle capital out of traditional office, retail style investments, and then that capital is looking for a home in some of the alternative sectors such as healthcare. So I do think that consequence of that capital shift will be positive for our segment.
Yep, spot on.
Thank you for joining us today. I really do hope that you found that insightful. As always, if there are further questions, please feel free to reach out to myself or any member of the Barwon team at any time.